I'm Ross Ballom. I'm an international legal, tax and structuring expert, and I work with ultra-high net worth individuals from all over the world to develop legal strategies to optimize their tax, optimize their businesses, to move them where they need to be, and so they can live a life that they dream of. Ultra-high net worth individuals, their key concern and the key thing that keeps them up at night and they worry about is basically becoming poor again. When you have a lot of assets, that's one thing you don't think about when you don't, is that you worry about losing them. And so the main thing I think that they worry about is actually tax. Not that they don't mind paying tax, but they really worry about being overtaxed and losing what they have. They worry about things like litigation with a creditor or a business partner or a messy divorce. So it's really anything that they feel, I've worked so hard to get where I am, I don't want to go back to where I've come from. How do I protect this? I think a lot of them do feel a lot of pressure to pass wealth on or to look after siblings, especially if they're the real wealth creator in the family. And so they want the best advice on how to protect and keep what they've earned. So private clients, if they want to touch crypto, and most of them do because they see that as a way better way of storing their wealth than in the fiat currencies, which they see are all decreasing, which is probably true. I think the first thing they need to understand is that there's a big difference between Bitcoin and the crypto casino. And I call everything that is not Bitcoin the crypto casino. And so you have to be aware that this is not a proper investment market. It is a casino. It is gambling and not investment, in my view. I think that's two different things. I think a lot of people confuse gambling and investing. So if you understand the casino, you can make a lot of money, but I think you just need to be aware that that is what you're doing. So that's the first thing. And I think Bitcoin is different. I think that is a true way of storing value, of storing wealth for long term. So I think that would be the first thing, just to understand what game you're playing. But yeah, then after that, you need to really have understood and built your infrastructure, your on and off ramps, how you get crypto in, how you get it out, how you store it. And that is something that you need to constantly update. You need to be talking to people and seeing what works, what doesn't. That interface between the crypto world and the traditional world, you need to manage very carefully. You don't want to upset your bank and have your bank accounts closed down because you're moving money around from places you shouldn't be or something like that. So you need to really have your crypto infrastructure well built, and also storing, of course. Storage is the key. The custody is the key thing. And where most people have gone wrong is that they've got too much faith in the central custodians, the FTXs, the Binances. People love convenience. They like things that make their life easy. So they don't want to store their crypto on a hardware wallet. They love just to leave it on an exchange. It's there, it's easy to trade, it all seems perfect until it doesn't, like what happened with FTX. So I think you have to learn cold storage of crypto and learn how to do it yourself. So private clients who are looking to diversify in crypto, it is possible. What the kind of the game you play is that you use Bitcoin as your kind of central storage. So you make money elsewhere, you take your profits elsewhere, and you put the profits back into Bitcoin. Some people would say Bitcoin or Ethereum actually. Probably you'd have 70% in Bitcoin, 30% in Ethereum, and you can use that as your kind of, that's my winnings, if I will. And then you can then play what's called the alt game. So very small amounts, well under 1% of your total investment, you can put into various different coins, follow YouTube channels to see what's going on, join Telegram groups, join Discord channels, have fun with it. And some of these things obviously do go up thousands of percent, but you have to remember to take your profits. I think that's what most people learn in crypto is they get greedy and they don't take the profit. And then obviously they see it crash back down again. So if you've got something that's charging up, take a gain and stick it in Bitcoin. Yeah, so trying to predict crypto for the next 10 years. Obviously everybody wants to know what's going to happen in the future. I'm super bullish on Bitcoin. I think that's proven that it hasn't been broken, it's not been hacked. It's been worked on constantly during all these bear markets. They've added the lightning layer to it. So I think as a store of value, I'd rather have my assets in Bitcoin than one of the fiat currencies at the moment. So I think that's a good bet for the next 5 years, without a doubt. It'd be interesting to see when the central bank digital currencies come in, how that might affect Bitcoin. A lot of people think Bitcoin might actually be a central bank digital currency. A lot of people think that the people that designed it were actually somebody like GCHQ or NSA. It does look like that that white paper was written by somebody who understood cryptography very well, which would suggest it might have been one of the intelligence agencies. So it might be that Bitcoin is actually a central bank digital currency. So I think that's a great place to store your wealth. In terms of investing, I still say it's a casino out there. Just have fun with it. But I think a lot of those coins will not be around in 10 years' time. So I think, if you make money when there's a bit of hype, but I would probably just stick with Bitcoin, actually. I'm what's called a Bitcoin maximalist. That would be my kind of advice, which I think a lot of people do. Once you've got into crypto and you've played around with the other coins and you research and you've been burnt a few times, I think you end up just sticking with Bitcoin and maybe a little bit of Ethereum. And I think that's probably the play for the next 5 years. 10 years, who knows? It's anybody's guess, especially with things like AI coming in. Very hard to predict what we'll see. Yeah, I think gold is very aligned with crypto philosophy. I mean, it's a bit of an anarchist movement, right? It's people that are just sort of had enough of the governments, had enough of the printing of money and the manipulation maybe of certain aspects of the market. So I think people want to go back to a hard asset like gold. So I think you see a lot of crypto investors would hold some gold as well. But I do think people at the moment probably fall into two camps. They're either slightly crypto curious and then very quickly become very pro crypto, or they just don't want anything to do with it and they'll stick with their balanced portfolio, and that's fine. They'll make money that way as well. There's many ways in the world to make money. I think the crypto hype cycle is toning down quite a bit. There's probably a couple more rallies to go before the volatility sort of equals the currencies like the euro. It's been predicted that around 2028 Bitcoin volatility will probably be the same as the euro. So maybe those sort of large opportunities to make big gains will have ended in crypto. So it might be that this all kind of flattens out and crypto, that the main coins will just become a sort of an alternative asset on a balanced portfolio spreadsheet. My approach to helping clients is really one thing that I found a big change with clients in recent years is that they don't really need legal advice. What they need is legal strategy. And a lot of clients now are self-helpers. They do their own research first. They want to understand everything. Pretty much you can learn everything on the internet. And what they want to come and check their thinking with somebody, and they want to have a strategy, and they want somebody to guide them, almost actually like legal coaching. They want to be coached in how to build their lives and how to walk through the minefield. But they don't need an expensive 10-page piece of advice that focuses on one topic. Maybe they do as part of a strategy, but they don't come to that specialist advice, I'd say. So it's more you are there to kind of build their life with them, actually. So I think that's what people need now. Yeah, I think it would be impossible to not talk about regulation in crypto in 2023. Obviously, it's the big topic. I think a lot of it actually is a lot of media hype. It's really out there and put in our faces a lot right now, isn't it? But I think when you sit down and read all the laws in all the jurisdictions, you actually come to the conclusion that the regulators are very crypto friendly, and crypto is welcome everywhere, except really with the US right now. But I think that's just a bit of a turf war in the US. I think they're probably just trying to slow it down. They didn't want all the money falling out the banks and into the crypto companies. I think they wanted to whack a few people over the head from the ICO boom in 2017, when a lot of those projects were actually securities and they didn't follow the rules. So I think it's more sort of a bit of internal battle going on there. I mean, while you see the SEC whacking all the crypto companies, JP Morgan and BlackRock and all that are very busy building crypto departments and building crypto infrastructure. So clearly the US is pro-crypto, really. We've had the MiCA regulations in Europe, which again was again trying to welcome, I think, the businesses that want to develop this industry. So I think it's only going to get worse, of course, because regulation never gets lower. Once it starts, it never stops. So it's something we all live with. When you deal with money, you have to deal with a regulator, basically, and how you do that is a challenge. But yeah, there'll only be more regulation. But I think it's not a negative, a ban on crypto. I think it's just trying to put a framework because people want it. I think everybody sees there's a slice of a big pie to to take? Yeah, I mean, talking about some countries, obviously we're here in Zurich, and I'm here because we're here in Crypto Valley, which is Zurich and Zug. So Switzerland has been very pro-crypto from the very start. You had the mayor of Zug turning up to crypto conferences in red trainers, and they were accepting tax payments in Bitcoin very early on. So Switzerland's pro-crypto, but as always with Switzerland, it has only wanted the good business. So it's impossible to sort of come here and just set in some sort of exchange up, and that wouldn't work. But they put in very good rules that are very clear to welcome businesses, high quality businesses. So I think, again, Switzerland's replicating a little bit what it does with its banking industry, welcome good quality business. And I think a few of the jurisdictions like the Maltas and the Cypruses and the Gibraltars have maybe paid a bit of a price for being successful during the ICO boom in 2017. So I think they caught a lot of the bad business, so they're perhaps trying to unwind from that. The Caribbean has put in some good laws. So places like Bahamas, St. Vincent are very not just crypto business, but actually blockchain businesses. So that's certainly an option. I think Singapore has been gung-ho, then gone on, what are we doing? Let's pull back, let's go again. So they welcomed all the businesses and then didn't give anybody licenses. So they drove a lot of businesses crazy, but that's Singapore. You know, if you're going to be in Asia, you need to be there, and you just got to go at their pace. And really that all played into the Middle East, which is obviously everybody's talking about, the Dubais and the Saudis, but Dubai has effectively become the crypto capital. Obviously a lot of people are sitting on huge crypto gains that are likely very taxable where they were living before. So a lot of people have moved to Dubai to realize those gains, but also because there's just a big, massive community there, and Dubai is very pro-blockchain. As we spoke about America, probably you need to stay away from any US clients, I'd say right now. Don't touch them with anything to do with crypto until that battle has gone down. But anyway, I think it's a pretty crypto-friendly world. Yeah, the residency piece is a big part of the crypto puzzle. I mean, this is a bit of a philosophy and movement, actually. It's not just an asset class. There's a lot of people that do not see how they can build wealth in the old boomer generation world. They don't see how they can just work a job or buy a house, get a pension. That they realize, and I think it's probably true, that you're not going to make any generational wealth doing that. There was a book written in 1997 called The Sovereign Individual, which talks about this cognitive elite group of people who would have digital assets, multiple passports, their businesses would be run online, and they would literally just move to wherever they were served best. And that is completely played out. And so buying crypto and operating in the online world goes hand in hand with having multiple passports, multiple visa opportunities, and really being very flexible to where you are based. And of course, COVID only pushed that thinking as people got locked down in places they didn't want to be. So it's part of building that strategy, that life strategy. You have multiple citizenships, you have multiple options to live. You know that you can tie yourself, your family, and your business down in low or no tax places where there's great healthcare, where there's schools, where you can hang out with people that are just like you, and that's what these people are doing. It is a cognitive elite who are kind of trying to hack the system or build a new system while the boomer one is collapsing. So one of my roles is I'm also chairman of the STEP, the Society of Trust and Estate Practitioners Digital Asset Committee. So from that we see a lot of what's going on in the intermediary world and how they are juggling trying to deal with this new asset class. I think most of them were kind of reluctant to get into it, but they've had such demand from their clients and no doubt also from their staff, no doubt have also been pushing the boomer generation at the top to kind of get into it. And I think a lot of people are very scared of it because they're like, I do not understand this asset. Are we going to get hacked? Am I going to lose the asset? What happens if it changes value? I hear it goes up and down very quickly, and they just have no idea how to manage it. AML is a big concern as well. But what I see is that it's actually very simple to manage because you can outsource that risk. Because when you think about this, it's all just risk management actually. And it's no different to dealing with cash or bonds. You effectively put that in a bank now and you outsource the risk of them holding it, of them valuing it, of them insuring it to the bank. and you can do that now with crypto. A lot of the big private banks here in Switzerland, they partnered with specialist crypto custodians. Some of them have actually took ownership positions. So a big private bank here, for example, you can be a client there or go to them, and they will help facilitate crypto transactions for you, working with specialists. So you can obviously tie your contracts down that they take responsibility for the custodianship of it. They make sure that it's absolutely unhackable and well protected. They make sure it's insured, et cetera, et cetera. So I think it's actually the same principles that you run through now with normal assets, you just run through with this crypto asset.